Hello, my name is Jessica Amir. I'm from Bell Direct, and today I'm at the offices of Magellan Financial Group with the company's co-founder, chairman and CIO Hamish Douglass. Hamish, thank you so much for having us.
A pleasure to be here with you.
Well, thank you for having us in your offices. So first up, congratulations on creating one of the most successful funds management firms in Australia. So we know the world economy is slowing. So what does this mean for investors?
You're absolutely right, Jessica. The world economy is slowing at the moment, but markets have been very strong. And normally you'd expect when there's a lot of uncertainty, we've got the trade disputes with China at the moment, we've got slowing economies, we've almost got a recession in Germany, we've got Brexit going on, yet the markets have been really strong. And what's the reason for that? And it's about interest rates. The US Federal Reserve changed its position at the beginning of this year. It was tightening interest rates at the end of last year, and as it was tightening interest rates, markets were going down. And now that they're loosening interest rates again, and the expectation is we're probably not going to see another interest rate rise from any major central bank in this cycle. And as interest rates go down, that's actually very supportive for asset prices. Warren Buffett has described interest rates as the gravity of markets. The lower the interest rates, the higher the markets, and the higher the interest rates, the lower markets.
And so you mentioned this key theme, lower for longer interest rates. So given this issue, how are you positioning your global portfolios?
Well, that's a great question. If you think about where we were at the end of last year, we were very defensively positioned last year. And we've been talking to people about the consequences of the end of this sort of monetary policy cycle and normalisation of interest rates. We thought that could be very disruptive to markets. So we were actually holding at the end of last year 20% cash. I actually thought it was going to be pretty easy coming into this year. We were sitting in 20% cash. And we were wanting to invest the money, but we wanted to invest the money as markets were falling. And we were expecting the US Federal Reserve was going to raise rates 2 or 3 times this year. And we actually had a whole series of investments we were going to make. I finished the year thinking we had done well last year. We had avoided most of the downturn that had happened last year. And I thought it was going to be very easy of knowing how to invest the cash this year. And I joked to our investment team after January happened when the US Federal Reserve effectively said, there are no more rate rises. And then in March, they actually said, we're going to start stopping our program for shrinking its balance sheet in that period. And that was a fundamental change. And I said to our investment team, this is a bit like Mike Tyson, where he says, everybody has a plan when you go into a fight, and to just step in the ring and you get punched in the face.
And speaking about getting that balance right and pouncing on opportunities, I guess, as Mike Tyson would with a punch, how are you finding opportunities and how are you positioning the portfolios?
Yeah, well, some of the positioning we've had is for a very long time. We like wind in our sails. We like to have some growth in the portfolio as well, because we like compounding money at satisfactory rates. One of my favourite quotes of all time is from Benjamin Franklin. Benjamin Franklin, one of the founding founders of the United States of America. And he said about compound interest, money makes money, and the money that money makes more money. And what you want to do is have businesses that can compound your wealth over time. So if you look at some of our very longer term investments, they've been in the big payment networks like Visa and MasterCard. For the last decade, they've compounded their revenues at sort of 12 to 14% per annum. And we've made around 7 times our money in Visa and MasterCard, and we still hold them because of the transition away from cash and cheque in the world to cashless forms of payment. We all know our tap and go behaviour. Whatever we do in Australia,